Ladies and gentlemen, welcome to the SRF Limited Q3 FY24 Earnings Call hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Meet Vora from Emkay Global Financial Services. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. Thank you for joining us on SRF Limited's Q3 and 9 months FY24 Results Conference Call. We have with us today Mr. Rahul Jain, President and CFO of SRF Limited. While we will hear Rahul's thoughts on the results as well as outlook shortly, but before that, let me invite Ms. Nikita Dhawan, Head of Corporate Communication at SRF, to initiate proceedings for the results call. Over to you, Nikita.
Everyone, and thank you for joining us on SRF Limited Q3 and 9 months FY24 Results Conference Call. We will begin this call with brief opening remarks from our President and CFO, Mr. Rahul Jain, following which we will open the forum for an interactive question and answer session. Before we begin this call, I would like to point out that some statements made in this call may be forward-looking, and a disclaimer to this effect has been included in the earnings presentation shared with you earlier. I would now like to invite Mr. Jain to make his opening remarks. Thank you.
Thank you, Nikita, and good afternoon, everyone, and thank you for joining us today on SRF's Q3 and 9 months FY24 Earnings Conference Call. I trust all of you have had the opportunity to go through the results presentation shared with you earlier. I will initiate the call by briefly taking you through the key highlights for the period under review, following which we will open the forum for a Q&A session. We have reported lower revenues and profitability during the quarter, with both our chemicals and packaging film segments continuing to witness a tough environment. During the quarter, gross operating revenues declined by 12% YOY to 3,053 crore. EBIT was lower by 37% YOY to rupees 457 crore. Profit after tax came in at 253 crore in Q3 FY24, down by about 50% YOY. Coming to our segmental performance, in Q3 FY24, our chemicals business reported lower revenues of 1,394 crore, down 21%. Within the chemical segment, our specialty chemical business faced challenges attributed to ongoing inventory rationalization by certain key customers. On a positive note, we witnessed some improvement in the later part of the quarter and expect this momentum to continue in the coming months. While the external environment was difficult, we believe that fundamentally the specialty chemicals business is in good shape, both in terms of products, new products, and capability. We are consistently expanding our new product portfolio, and our pipeline for complex downstream products and active intermediates remain on track. During the quarter, we introduced 3 new products in the agro vertical and successfully commissioned 2 large dedicated agro facilities. This not only demonstrates our commitment to growth, but is also a reflection of our customers' confidence in SRF's ability to consistently deliver highly complex products, even amidst short-term market fluctuations. Furthermore, in our continued efforts to enhance the supply chain resilience in the current environment, the company has further diversified its raw material supplier base. Over the first 9 months of FY24, the company has capitalized around rupees 1,100 crore in capex in the segment and is scheduled to capitalize an additional rupees 700 crore in capex in Q4. Such large capex values are a testament of our confidence in this business. When these projects come on stream, our immediate focus is on scaling up these new facilities in the subsequent quarters. We remain confident of a significant recovery in Q4 in our specialty chemicals business. In the fluorochemicals business, we navigated through a seasonally weak quarter for ref gases, marked by lower volumes and realizations, particularly in key global markets, which exerted pressure on margins. Despite the current impact on refrigerant gases, the underlying potential for global and domestic HFCs remains strong and with significant traction from India, the Middle East, and Southeast Asia, which should play out in the ensuing quarters. Additionally, we believe that pricing will be more rational and we should be able to accrue benefits of that in our refrigerant gas business. In the industrial chemical segment, we witnessed slowdown in the agrochemicals and pharmaceutical industries, which adversely impacted the demand. Amidst these challenges, we successfully commissioned the PTFE and the R32 plant in Q3. Accordingly, our immediate focus will be on ramping up sales to optimize returns and efficiency in these newly commissioned facilities. In our packaging films business, SRF reported a decrease of 9% to rupees 1,091 crore during the quarter. This downturn was largely due to the oversupply in both BOPET and BOPP film segments, which put considerable pressure on profitability. Despite these market challenges, we performed relatively better when compared with the broader sector. Moving forward, our focus remains on enhancing operational efficiencies, optimizing costs, and strengthening our contractual sales to navigate through these tough conditions. We are pleased to highlight that we commenced and successfully capitalized phase 1 of our aluminum foil facility on January 1, 2024. This phase represents an investment of around 536 crore. This cutting-edge facility has a high-precision rolling mill, enabling us to produce premium products in thinner gauges and wider widths. With this project, we will be amongst very few players globally who offer a wide portfolio of packaging substrates, BOPET, BOPP, and aluminum foil under one roof. Moving to our technical textiles business, we reported a healthy performance during the period under review, driven by an uptick in domestic demand for NTCF. Despite our Manali operations being impacted due to the Maichung cyclone in December 2023. Having said that, we have adequate insurance cover in place on a reinstatement value basis against such occurrences. I am glad to share that all our employees are safe and our team was able to largely restore and restart the machinery in record time. In the belting fabrics and polyester industrial yarn segments, we witnessed a healthy performance during the quarter and expect the demand to grow in near future due to an increased focus on infrastructure spending. Lastly, our coated fabric division reported all-time high domestic sales and profitability. This was primarily driven by strong demand for our products, including value-added products such as blackout fabrics, high GSM fabrics, and storage liners. In laminated fabrics, SRF continues to perform well, operating the plant at full capacity. Additionally, the Board of Directors has approved a second interim dividend at a rate of 36%, equivalent to rupees 3.60 per share, based on the paid-up equity share capital of the company. This decision follows the earlier approval on July 24, 2023 for the first interim dividend at the same rate of rupees 3.60 per share. Moving on to the broader corporate achievements, SRF has garnered several prestigious accolades and acknowledgements for its various achievements. The company has been honored as Dun & Bradstreet's India's Top Value Creator 2023 in the chemicals category. Furthermore, SRF's annual report for 2022-23 has won the Gold Award and secured a position in the top 100 communications material worldwide at the League of American Communications Professionals, LCAP's Global Communication Competition, the 2023 Spotlight Awards. Our Dahej site received the gold medal in the 2023 EcoVadis Sustainability Rating, reflecting our commitment to environmental stewardship. The company's commitment to social responsibility has also been recognized, with SRF being adjudged as the first runner-up in the Education and Skill Training category at the CSR General Excellence Awards 2023. These accolades underscore the company's dedication to excellence and sustainability across various domains. 2024 marks SRF's 50th anniversary. Thanks to all our stakeholders, we have been doing business as a company for half a century since our first facility in Manali commenced product operations by manufacturing tire cord fabric in 1974. Our 50-year history is a series of transformation. As we look to the future, our position remains strong and promising for delivering sustained performance, particularly as the end market begins to rebound. Therefore, despite the recent challenges, our outlook for future remains positive. This optimism is based on our proven track record in developing high-quality, complex products, all of which are supported by world-class infrastructure, skilled professional, and exceptional R&D capabilities in driving sustainable growth of our business for people and the society at large. On that note, I conclude my remarks on a positive note and am confident of a significantly improved performance in Q4 FY24. I would be glad to discuss any questions, comments, or suggestions that you may have, and would now like to ask the moderator to open the line for the Q&A session. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity and good afternoon, Rahul sir. So first question is on the agrochemical project. So we have, you just alluded that almost 1,800 crores of capex will be done during this year. My sense is that predominantly on the agrochemical projects. So what is the visibility that we have for the next financial year in terms of firm commitments from our clients? Thank you.
So you're right, Rohit, that we have done about 1,100 crores of capitalization during the year. Not the entire amount may have been incurred during the year because that's a cash versus capitalization issue. But yes, roughly about 1,100 crores already capitalized and about 700 crores to be capitalized during Q4 is the current target that we have. I believe that when we look at it, there will be a positive in terms of the overall positions that have been created. Some of the plants that were capitalized during the period have also resulted in significant revenues this quarter as well, and hopefully that momentum can sustain going forward. In order to be able to give you a better view of FY25, I think we will have to kind of wait a bit in order to be able to understand this better. Generally speaking, what we've done also in the past, Rohit, is to be able to give you a position once our budgeting exercise and various other things that we do on an annual basis is completed. And let's say during the May call, we should be able to give you better color of this. But like I said during the initial comments also, is the fact that we believe that there is good traction that we are seeing in Q4. In fact, some of the positives started to begin end of November, early December, and we believe that can continue going forward. I hope that answers it, Rohit.
Sure. That's helpful, sir. The second question is in terms of how the ramp up for PTFE and aluminum foil projects is expected based on starting from say FY25, and when are they likely to reach maybe optimal utilization based on your internal assessment? Thank you.
So I think both are different, so let me tackle them differently. PTFE was capitalized somewhere in October of 2023. We believe that it's a product that will require approvals. We are already getting into the bulk grade. The bulk grade is seemingly selling well. But the fact is that the overall operating leverage will play out in PTFE over the next 6 to 12 months, maybe slightly more than that. As we get into fine cut, as we get into, let's say, free flow and modified at later stage, we believe profitability should be better. However, if you look at only Q3, I don't think it is relevant because the size and scale of the project is so large that it will take time to ramp up. Our rough sense is basic products ramp up in 6 months, more of the value-added products in 12 to 18 months. That's how PTFE should pan out. Aluminum foil, we are looking at getting accelerated approvals from both local and global customers. That's also a journey that is in place. Hopefully, some positive we should see at the end of Q4. But largely, I think maybe about 6 months for some of the global approvals to come through, 6 to 12 months for the global approvals to come through is what we would look at aluminum foil for.
Sure. Thanks for answering all the questions and best of luck, sir.
Thank you.
Thank you. And the next question is from the line of Vivek Rajmani from Morgan Stanley. Please go ahead, sir.
Hi, sir. Thank you so much for the presentation. 2 questions from my side. Firstly, on specialty chemicals, in terms of the significant improvement that you're expecting in the fourth quarter, is this a function of your new capacity ramp up or customers making up for the orders that they rescheduled earlier this year? Or is it a function of just an improvement in the underlying demand from where we are? That's the first question.
Can I answer the first one before you ask the second one?
Sure, sir.
So you're right, Rohit. Like I said during the initial call also, the fact is that we've seen some significant positive of the new plants that were capitalized during the 9 months coming through. Some of the projects have started to do really well. We are seeing significant traction in some of those molecules that have been launched, and they are really adding to revenue. With respect to and the second piece that you asked in terms of where the significant improvement that we are talking about comes through is the fact that we have always said that we have not seen any major order cancellations happen. What we have seen is delay, and what we have seen also is customers wanting the product again. We are seeing traction around that. So I think it's a combination of both that is panning out rather than one singular factor there. Vivek?
Sure, sir. That's really helpful. And the second question was on packaging. I understand it's a very tough environment. You've been highlighting that for a while. But we did see 2 quarters of sequential improvement in the first 2 quarters of this year. So just wanted to understand what really changed this quarter in terms of, the decline. Was there a reduction in the utilization rates of volumes, or any color around that would be very helpful?
So again, very difficult to be able to answer what changed during this quarter. To be very frank about it, what we have seen is that the pricing has been lower. The overall positions that have been created in the business from an overall environment and the overall industry perspective seem to be continuously going on the lower side. Margins are continuously under pressure. So that is essentially what we are seeing now. To be able to say why there was a sequential decline in quarter-on-quarter, I don't think we should look at it from that perspective. Again, from an annual perspective, when we look at, we will find significant, let's say, if not a significant positive, but at least some lower negatives in that sense, when you look at it from an annualized perspective. Europe is kind of closed in Q3. Even South Africa, for that matter, also goes through a long holiday period. BOPET also is going through a tough environment. So I think those were the kind of factors that played out in Q3. Hopefully some of that will be better in Q4, given the fact that we've also started to see energy prices in Europe come down. What has also started to happen from a Q4 perspective, Vivek, is that the supply chain challenges that are existing in the Red Sea today. And therefore, some of the local European customers are kind of gravitating towards local suppliers. So to that extent, it should also be a slight positive for Hungary, albeit in the short term, is what we see here. Vivek?
Sure, sir. That's very helpful. Thank you so much and all the very best.
Thank you. And the next question is from the line of Abhijit Akela from Kotak Securities. Please go ahead, sir.
Yeah, good afternoon, and thank you so much for taking my questions.
Raoulji, on the specialty chemicals business, last quarter we had kind of indicated that we still expected at least a single-digit revenue growth for FY24. So just sort of wanted to get your perspective on whether that target is still achievable and how much roughly would the growth might have been YTD in the first 3 quarters of the year.
So again, frankly, Abhijit, you are right that we had said that we are very hopeful of a growth position that is getting created. Again, to be very frank about it, I am still not giving up hope, right? So the way things are looking, it could be a very close call in terms of the overall operations and the overall revenues that play out in terms of what we had guided earlier. However, it is, to be very frank, a close call to be able to get there. We will have to find alternatives. We will have to find our positions on some of the chemicals. Again, I'll just say this: we are still very hopeful that we should be able to get there.
Yeah, but the YTD number, sir, is it possible to share something about how much it's been?
Let's say the overall sales is kind of negative by about 10-11%. When we compare 9 months to 9 months.
Understood. That's helpful. Thank you. And just the last thing from my side was regarding the capacity utilization, actually, both in refrigerants and in packaging films. If you could just give us a flavor for how utilization, is trending right now across the business.
You're talking about the packaging films business? Abhijit, you're talking about the packaging films business or some other business? Hello? Am I connected, operator?
Hello? Yes, you are audible.
I am audible, so maybe Abhijit has got disconnected.
Okay.
So, just to answer Abhijit's question, and what I understood from the question was the overall utilization in the packaging films business. When we look at the overall capacity availability during Q3, roughly about 90-91% was our capacity utilization.
Hello, Arjun sir? Arjun sir, can you hear me?
Yes.
Yes, are you satisfied? Are you satisfied with the answer?
Actually, I haven't asked a question yet.
Okay. Sorry.
That was Abhijit Kotak. I think he's dropped off. Maybe you can go to the next person wanting to ask the question, please.
Sir, I think he's unmuted me. I'm Arjun from Kotak Mutual Funds.
Hi, Arjun.
Hello, sir. So actually, first, just carrying forward from the earlier question, in terms of the spec chem, from what you've indicated, essentially in the fourth quarter, if you're saying a close call, essentially we are, in a sense, guiding towards maybe a growth from the previous year. And the previous year, fourth quarter was exceptionally strong. Is that the right understanding of your comments, sir?
Okay, again, Arjun, to be very frank about it, you do not have a color on this, because when we look at numbers on a quarter-on-quarter basis, what you see is numbers on CB as a whole. Now, when I look at CB as a whole Q4 number last year, it would also have some performance of the fluorochemicals business, which was a positive at that point in time. What I am only trying to say is that the significant positive that we are talking about, or the significant recovery that we are talking about, is largely the spec chem business. And again, given where this environment is today, Arjun, we still feel very positive for Q4 for the specialty chemicals business. I don't want to get into looking at it from a Q4 versus Q4 and what's the growth number and what's the position on that side. I hope that answers it.
Fair enough. Sir, when we look at spec chem 9 months, we do get some flavor on the export numbers. And the fact that you have mentioned maybe a low double-digit decline in spec chem essentially means we are selling a lot of product on the domestic side. Would that be the correct way of understanding this?
Yeah, but Arjun, when we talk about selling domestically also, I think it is also to a very large extent at the behest of our global customers only.
Right, because new formulation facilities are being set up in India.
Right. So to that extent, while there may be if you look at it from a pure mix perspective, let's say 3 years ago or 2 years ago, when it was 90-95% as exports, we are probably at about 75% of exports today, if you look at it from that perspective. But when you look at it from a domestic perspective also, that's also at the behest of the global customers only. So we don't really want to differentiate in that sense. We still believe our global customer share in our business is still about 90-95%.
No, fair. I'm just saying in terms of tracking only export numbers, that doesn't probably give the full picture.
Again, you guys track export a lot more closely than I do. So when you look at January numbers coming in and when you look at February numbers coming in, you will probably get a better sense than what I will.
Fair enough. Sir, the second question is just if you look at CapEx FY23, we did roughly 2,850 crores, and we mentioned we are capitalizing roughly 1,800 crores in FY24. So essentially, the remaining part of the CapEx, what are the major projects which will probably come in FY25?
So again, Arjun, as of now, the projects that have been sanctioned, which are multi-year projects, are roughly about 1,100 crores. That will get incurred in FY25 and 26, so 2 years. Now, given the fact that this year the overall capex number has been slightly lower, what we do see is the fact that next year, what we will end up seeing is probably in the range of about 2,200 crores as the overall capex. Again, the mix remains in what we've talked 80% in the chemicals business and the balance in others. Now, the way things will work out is that's a traction that will continue to go on, at least for the near term and the near future as well. When we also look at, let's say, an overall guidance of 15,000 crores that we had talked about at some point in time, maybe a year and a half ago.
Right.
I think to a certain extent we've achieved that for FY23 and FY24. But when we look at it from an overall 5-year, 6-year perspective, if not 5 years, this will probably get done in 6 years. So that's the only change. Again, our balance sheet remains strong. Our commitment to capex remains very strong. So that is something that we believe will continue. I hope that answers it also.
Oh, perfect. Thank you so much. And wishing you all the best.
Thank you.
Thank you. And the next question is from the line of Krishan Parwani from JM Financial. Please go ahead, sir.
Yes. Hi, Rahulji. Just one question from my side. I think you mentioned that almost INR 18 billion worth of projects have been commissioned. So just wanted to...
I said 1,100 in the spec chem space, and I was only talking spec chem. 1,100 done, and 700 to be done in Q4 is what I had said, Krishan. So just correcting you on that. Because there is the PTFE that has also been capitalized, there is a 32 that has also been capitalized, and various other smaller projects also. So when I referred to 1,100 crore, that was only for the spec chem business.
Yes. I was actually, I should have clarified. Yeah, I was referring to more of spec chem. So let's say 1,100 that you have capitalized and 700 you are going to capitalize in 4Q. So total about 1,800 crores. So just wanted to understand, till we achieve, let's say, better, let's say 60-70% plant utilization of these capexes, could there be, let's say, the near-term margin pressure?
Could that create margin pressure? I didn't get the question completely.
Till you actually achieve, optimum utilization or let's say 75 or 80% utilization, your cost could be higher and the revenue could be lower. So could there be, let's say, a case where your initial margins could be under pressure?
Not really, Arjun. Sorry, Krishan, not really. I would tend to believe that that's a journey that continues. Right? There will be new capexes that will get capitalized, which will take time to ramp up. Those that were capitalized last year are ramping up today, while the industry still is a kind of a negative. While what you are saying from mathematically is right, that it will always have a small negative on the operating leverage. Like, for example, when the PTFE gets capitalized, it will take time to ramp up. So to that extent, there will be a negative operating leverage. But I don't think it should be very significant in that sense.
Understood. And just one bit on that. So do you have any guidance for margin range, let's say for 25? I know you don't...
Krishan, we don't do that. I would tend to believe that, again, from an overall perspective, the margin for Q4 should be better than what we have achieved in Q3. That's the only thing that I can tell you. I can't go into a range of the margin also.
No problem. No problem. This is helpful. Thank you and wish you all the best.
Thank you. And the next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah.